Good evening, everyone. Welcome back to another video. This is your second part of the video, second series, in which we are discussing market structure for 2024 entirely. We'll be decoding all the important structures, right? So in this video, we'll discuss what's happening in Nifty and what kind of chaos, right, it's been creating for the past few days. Some people on social media, they're sharing their biggest drawdown ever, 50 lakhs, 83 lakhs. Someone who said 83 lakhs biggest drawdown ever, right? Single day. Suddenly they're saying I made 2 crores. So that's justified. Somewhat, whatever. I'm not here to comment on someone's loss or profit. Point here is that this structure, right? We're here to discuss market structure. So this structure is causing all the damage. Okay. What is this structure and why does it form is very important to learn. Okay. This usually happens, this complicated structure. So complex correction, we call this a complex correction in Elliott wave terms. Complex corrections, right? Why does it happen? It happens for distribution purpose. Okay, it happens for distribution purpose when participants are highly biased in one direction. Okay, highly biased in one direction. Sometimes these kind of complex correction takes place in the market, right, to shake out all of them, if you remember, sudden drop, everyone became bearish. Okay, there are obviously some talking heads in social media that say this is buy on dip opportunity. Okay, straight gap up, went higher, did not give entry opportunity, no low risk setup, again gap up, everyone became what? Bullish. What did the market do? Flush down, up, immediate down, right? Again, it gave everyone hopes, the bulls hope that market is going for ATH again flush down, right? Sharp move, everyone is what? Heavily in one direction now, suggesting what? The game is over, right? It's going to be a very big bearish move. Suddenly again gap up, right? Again fall down. These kind of sharp moves are called complex corrections. This happens only to shake out all the participants. Okay, and this is mainly done in for distribution purposes. Okay, some big hand after a big move in their portfolio wants to rejig, right? Or this happens because some event in the next few weeks or next month is coming. So for example, budget is coming, plus on your 11th and 12th is your what? Your CPI data, US CPI data, right? Then afterwards, towards the month end, I think 30th or 31st, around this date is your Fed event. 1st Feb is your RBI, sorry, not RBI, your budget, right? Huge events, all this. So before all of them, market is shaking out all the participants. It's common, right? But for a trader, it's very difficult to see because a trader has not seen all this in the recent 1-2 weeks, has not seen, or at least 1 month, has not seen this kind of movement in the market. Okay, so it's very difficult to comprehend in the live market. So you must know on the larger time frame what kind of structure you're in, right? If you see, the market is still holding 38 to 50% of the previous swing, something which I told many times, I've taught many times, this is called zone of continuation. As long as 38 to 50% zone, right, is held, right, there's a good chance market will continue the trend again, right? There's a good chance. So for that, this zone has to be protected. Okay, so here the trend is what? Bullish. So the bulls have to protect this zone in any case to give a new leg on the upside. Okay, here this complex correction, what does it tell you? It happens in only 2 waves, which is your wave B or wave 4, right? These are known for distribution phases, time taking phases, and they are complex in nature. In the Elliott wave master course, right, I have taught you what? Wave 4 in your impulsive wave is the most dangerous wave. It chops out everyone. Okay, most 90% people lose money in this wave only. Okay, 90% traders lose their money in this wave. All right, so Keeping all this in mind, let's discuss what is the market structure which is happening here. Okay, so earlier, what did I give you? I told you two possibilities in the market. Both the possibilities were market does an A wave here, a B, and then C to this level. Okay, or market goes up. This is your one move, goes back higher, and then falls back down. Okay, so this has almost completed. 430 is your target, and market came till 448. Right, so this is a good level. Now I gave you a pivot zone for the entire week. So I'll tell you why I gave you this pivot zone. It's very important for the next week, sorry, this week entirely. The reason here is there are multiple structures. So when you study market structure, when a complex pattern is forming, right, there are multiple possibilities which come to your mind. For an analyst, there are multiple possibilities that comes to his or her mind. Here, you can take this as a running triangle. Okay, you can take this as a running triangle, and market will go higher. In case this is a running triangle, question is, why did it come as a running triangle? I already taught you this. All the moves are coming between 68 to 70%. So a move came down, extension 78%. Okay, I've already taught you this in the Elliott Wave Master Course. Go and see it once. All the moves are coming in 68 to 70%. This is what I have noticed. Again, 78% retrace. So this move was 78% of the previous move. Right, next, so the extension, how will we know the next move? We have to put your Fibonacci extension here and see till where it goes. Okay, that I already showed you. It came till your 67 to 61.8 to 78%. Now we will check for this one, right? How far did this go? Right, let's see. This also came exactly around 78%. Okay, so the next wave down. So we have what? We have A, B, C, D. Right, now we have to check the length for this. What do we want? Approximately around 78% will be very good. Right, so let's check the extension for E. Let me just put it. If you see the extension for wave E, it has gone a little bit more than 78%. It has gone overshoot, right? It has gone to exactly 21,448, I think was the low here at this point, and 1x level is 453, right? So 5 points. By 5 points, it has a little bit crossed. That's not an issue, but that raises questions. Okay, that raises questions which I will explain to you. So this is one setup. Okay, this is your A, B, C, D, E setup, which is your triangle. So how will it look like? It will look like this. A triangle is over, and for a triangle, after a triangle, it's a high probability setup, right? If this is a really a triangle, then next day the market must retrace entire move till here, at least 21,725 has to be retested tomorrow itself. Okay, a move which will come, which is actually fast after triangle. So the minimum target must be the length of wave A. That is your minimum target. So this is approximately 329 points, so 330 points, right? So from here, market must give a 330 point move minimum, which is approximately 779. Okay, so round figure, you can take 780, no problem with that. So 780, it has to come if this triangle is over. Okay, minimum requirement that this target hit, minimum I'm saying. After that, it can cross, it can touch this, come down again, cross and go high, not a problem. Okay, minimum requirement is your 780 level, 21,780. Okay, next, if this triangle is completed, it has to retest this entire, the last swing. This is the last swing of the triangle, right? It has to be retested immediately, right? Then the very next day. Here, it took a little bit time to complete. The triangle was completed today. So tomorrow it has to retest this if this is a triangle. Okay, next, the alternate setup after this. What was the other possibility? What can happen in the market? This is again based on time. So I have tweeted this out that as per time, right, I wish to see a swing high made this week and fall from 12th or 16th onwards. That is your next week, right? 12th or 16th onwards. So in case of an inversion, what is inversion? I have already taught you guys so many times. Time inversion takes place, then the exact opposite will happen. What is the exact opposite? Instead of swing high, we'll get a swing low. Okay, so today is 10th. Today is 10th. If this triangle setup is valid, and within next 2 to 3 sessions, if we break this high and go further, make a new ATH, that can be considered as a swing high. Now, tomorrow evening, Thursday evening, okay, Thursday evening 11, right? Tomorrow evening, we have what? US CPI data. We have US CPI data. So this is a potential event which can disrupt the structure of the market. Potential event. I'm not saying this is the reason why market will go higher or lower. Remember, we just look at the news, that's all. For us, news days are just important days to keep your risk in check. Otherwise, we're not interested in what news is coming out, who is talking on the TV, who is wearing which suit, which tie. We don't care, right? For us, only the market structure is important. Market will tell us everything. No need to look at the news, right? So here, this is one potential event. So for that to happen, for this to happen, exactly we want high from 12th or 16th. We want to see a high and fall. Then market has to go like a pump move tomorrow itself. Tomorrow by end of the day, you must see some pump move and new ATH. Why? Then only this will be a wave 4. This will be a wave 5. Okay. So this is one of the possibilities. Now, what is the other possibility? What did I tell you? I told you the other possibility is that market makes an inversion, meaning exactly when you're expecting a swing high in the market, it makes exactly a swing low at that time, right? That is called an inversion. Now, do we have historical reference? Yes, we have. We have one reference. I tweeted this also out, right? If you're following me on Twitter, you have seen this already. So Nifty January 2023, that is last time. Now what happened? Same New Year time high, we got one. After that, a low on 12th Jan. This is important now. Okay, 12th Jan low we got, right? So important date is around 12th. Keep this in mind. So 11th and 12th, we can take one day before also, because we have CPI data coming out on 11th. We'll take 11th also. So 11th and 12th important for us. Here in this case, it gave us a swing low. Okay, this high swing high was again on 9th Jan 2023. So 9th Jan 2024, that is day before yesterday. What happened? Market gave us a swing high like this again, 9th Jan. Okay, and we fell down. So like I said, when you study time, it's very important to keep in mind that it can give exact date but opposite expectation, right? So in that case, what will happen? In that case, what will happen is market will do something like this. Okay, market can do something like this and then bounce back again, right? So 12th, 11th, and 12th, we can see a swing low and then bounce back higher again. Okay, so this is a very complicated scenario right now, and for that specific reason, I gave you this zone, pivot zone, right? I calculated this and gave you this pivot zone for that one reason. So now question is, what should we follow? I know this question is going to come up. This is the doubt which many people will have. So what should we follow? How should a trader think? Okay, analyst here ho gaya, we saw the charts. It's confusing, and what to do now? For that one specific reason, I gave you this zone in advance, right? 21,530 to 21,555. Market, if sustains above this, it's bullish. If it stays below this, it's bearish. These pivot zones are very, very powerful. Okay, and you have seen the reaction here yesterday. Exactly, market gapped up and opened. I gave you 15-point zone. That's all, right? Only on 15 points, and market gapped up and exactly within this zone. Pushed down first, right? Went back higher. So again, obviously, there's no shorts here. Market, when it broke down from here, you saw the entire swing down, right? Very simple game here. Entire day, market was stuck in this zone. Afterwards, it broke out from here and went higher, right? What pattern did it make? It made an N pattern, right? Important zones, you have to look for important structures at that time. N pattern. Same here. What did it make? It went down, went up higher, and then fell down. This is actually called an extended W pattern, but you don't have to, unless if you know all those patterns, fine. If you don't know, it's not a problem. You can just use your zone here like this. Okay, simple. Going forward, now what? So we have this zone, price above this. I am personally not going to take any short. Simple. Market suddenly falls down below this. Okay, market suddenly falls down below this. I know what 11th and 12th is important time zone. Market can go back higher, right? Inversion in case of that. Again, if market is blasting higher, right? If market is blasting higher from 11th and 12th itself, I know it's very careful, important time zone. I don't have to, I know the minimum target. I'll book my longs here. Why did I take long? Because we are above this level. There's a different reason for why I took longs also. I'll probably explain it in the tweet if that scenario comes. Okay. So reason is simple here. Structure is simple, right? 21,780 is the minimum target if your triangle has been formed. If it's not, then there's a good chance we can come back down also. So for this specific reason only, I gave you this zone that you know which side to stay on, right? Again, I don't recommend trading. I only share this for knowledge purposes, my views and analysis. All right. So going forward, your important date is 11th to 12th, right? Next week, again, 16th is an important date. So we'll see if market, what kind of reaction. The most important one is tomorrow, CPI data in the evening, and Friday there is PPI data. Jobless claims is again on 11th. So it's going to be very important. If in case, again, let me repeat it. If in case we see a pump move tomorrow, expiry day, pump move, like this straight up move, right? And we go hit 950, 950 approximately, right? 950, 960. Be careful in longs, right? It can be a trap. This entire move can be a trap if there's a straight pump move in the market. Okay, be careful in that scenario. That's all I can tell right now. This is all I have for you guys. I'll discuss other structures, other assets in the weekend video. For now, this is all I have for you, and I'll see you in another video of the market structure study. So very important details I've shared here, and you can learn something from this. Thank you guys. I'll see you in another video.